It's time for the Financial Crisis Talk Center with Ken Gross and David Einstandig from Thav Gross.
Credit card debt is number one. I view it as financial cancer.
40% of your gross income is going to just pay the debt service. You got no chance of getting out.
I would give up my credit score to get rid of debt.
Here's your host, Ken Gross.
Welcome to the Financial Crisis Talk Center. This segment today, we are going to talk about how do you address a tax problem. Brian Small, myself from Thav Gross, we're going to walk through the issue of how do you address that horrible, nauseating, aggravating, stressful situation of having a tax problem.
And believe it or not, the response isn't you don't have to beg.
You don't have to beg, and you don't have to blow your brains out because, but tax problems are difficult and stressful to deal with. But I'll tell you one thing. I don't know about settling a tax problem by calling up a cartoon character and asking him for help. So George from So On and So Forth, who's got big glasses on TV and comes jumping out at you and says he's going to take your tax debt from $100,000 to $3 by taking a magic marker and drawing a line through it. I wish it was that simple, because you know what? If it was, I would get myself into tax problems so I could call the cartoon character to take the black magic marker and cross it out and get rid of it and save all that money. But that's just my thoughts of the day. Interesting article I saw. There was a lawsuit. UBS was the company that had talked people into keeping all of their money overseas and effectively cheating on their taxes because they had promised to keep it secret from the U.S. government. And the government, over the course of the last 10 years, broke through that whole process, penalized UBS, and ultimately all U.S. citizens have to report their income even if they're living abroad or if they're in foreign bank accounts. We've got very strict laws. Well, a group of people that were victimized because they got caught as tax cheaters decided to file a class action suit against UBS in federal court. And on Thursday, the Seventh Circuit Court of Appeals in Chicago, Judge Richard Posner, threw out the case. And here's what he had to say. The plaintiffs are tax cheats, and it is very odd, to say the least, for tax cheats to seek to recover penalties and interest from the bank that provided the income they concealed from the Internal Revenue Service. Which you can't really question the judge's reasoning there. You can't be a participant in a criminal act and then go into a court and ask the court to enforce your loss from your criminal partner. And the judge referenced a 1727 case called Everett versus Williams, in which a highway robber sued his partner in crime for an accounting of the illegal profits of their criminal activity.
That's just great stuff.
This is the best. According to the decision, the court refused to hear the case, and both parties to it were hanged. Now that is paying a price for filing.
That's a little bit of an ultimate justice there.
That's a bad situation that's a situation where you don't want to file a frivolous lawsuit, and if you do so, the consequence is not only do you lose your life.
It makes debtor's prison completely an interesting concept, so to speak.
They were a little bit tougher in those days, I guess, on right and wrong from the standpoint of using the judicial process in your favor.
Gosh, you got to wonder what they would do if you didn't pay your cable bill.
Yeah. Well, it's if you conspired with somebody else not to screw the cable companies or something, and then you sued one of them. That's where you don't sue your cohort in crime. You can't use the court system for doing it. There's actually a legal term for that. It's called in pari delicto, and it says if you're in cahoots with the other guy, you can't bring a lawsuit and use the federal or the state courts in order to arbitrate who's right and wrong between two people that are involved in a criminal or illegal act. And that's one of the basics that you learn. I want to thank our sponsors before we get too far along the way today. Cronin Law Firm, Gold Star Law, Venn Johnson Law, our gift certificate sponsors, Johnny Pomodoros, Garden Fresh Market, and Rendezvous Cafe. Case study today, tax problems. I'm going to give you Fred and the restaurant business.
This is not Fred Flintstone, though.
Maybe. I don't know what his last name is. We don't do last names. Well, you want to call him Fred Flintstone?
I don't know. It depends. Based on the facts of your case study, it might be Fred Flintstone.
Was it Fred and Wilma's restaurant chain or Fred and Barney's restaurant chain? What was the name of the dog?
Dino.
Dino. Okay. I was having dinner last night. Do you remember the Jetsons dog?
Astro.
Astro. You're pretty good on your dogs. What was Underdog's real name?
You got me there.
We'll have to figure that one out for next week. I have no idea. I don't know if Underdog had a name. All right. Anyway, restaurant business. Here's Fred's situation. He operates multiple chain, or he did. Tough business, the restaurant business. Everyone knows that. You got a lot of overhead. You got food costs. You got employees. A lot of headaches to the restaurant. He had a lot of employees at 3 locations, managers, staff. He ended up with some big payroll tax obligations that went unpaid for a year. And here's where he is today. He owes FICA and Medicare taxes for the employer portion. He owes the employee's portion of FICA and Medicare taxes. He hasn't paid the employee's portion of the federal withholding tax. When you don't make your payroll tax deposit as an employer of a business, when you give your payroll checks to an employee, you're withholding from their check their Social Security, which is Social Security and Medicare, and the amount of federal withholding that they're going to pay into the government.
And state withholding.
State withholding. Those monies are held by you in trust for them, and you're supposed to pay them over to the federal authorities and to the state authorities. In addition to that, you have to pay employer payroll taxes, which is the FICA and the Medicare tax. Every time you have a payroll tax deposit on a federal basis, it's comprised of federal withholding plus the employee and employer's share of Medicare and FICA, which is Social Security. He didn't pay that. He didn't pay the state of Michigan. He didn't pay the employee's state withholding that he had withheld from their checks. He hasn't paid the sales tax for the year, and he hasn't paid the MBT tax, which no longer exists, but it existed through 2012. Total balances that he owes. He owes to the feds, penalty and interest, $250,000. On the trust fund portion, which I'll explain after the break, he owes $175,000, and on the state, he owes $100,000 between all 3 of those taxes. So he's got a boatload of trouble. The restaurants are closed. All he has with him right now is the tax problem. We're going to figure out what's he going to do.
No one ever thinks that a serious injury can happen to them, but it can, and it does. And it can happen to you. And when it does, you need a fighter in that courtroom for you. Call me, Ben Johnson. Automobile accident, police misconduct, medical malpractice, product liability. You know what you're up against, how hard it is to get answers. When all you want is justice, call me, Ben Johnson. Whatever your legal crisis, I will fight for you. Call me today.
Ken Gross, attorney, talk show host, and leader in the law, reveals his secrets to leveling the financial playing field in his book, Dump Your Debt.
The rules of the game have changed. Now the banks get the bailouts at our expense. Dump Your Debt is your bailout. It tells you what you need to know to shed credit card debt, solve tax problems, and exit a house underwater.
Buy Dump Your Debt online at Amazon.com.
It's the game changer you deserve.
You like your job. What you don't like is the way your boss has been treating you. He's making comments about how you look instead of your work, and he's been touching you inappropriately. If you complain, is he allowed to fire you? Absolutely not. Unwelcome sexual comments, advances in contact are illegal in the workplace. Make him pay. Gold Star Law is here to help you through your employment law problem, whatever it is.
Gold Star Law, protecting employees' rights. Call 1-800-WAGES-10 for a free consultation today.
Carrying too much debt? Dump your debt. Call Thav Gross.
You don't need to be broke, and you don't need to hit rock bottom. If you have income and you're struggling with debt, dump it. Think about the next 10 or 20 years. If you do what the banks tell you, you'll have nothing to retire with. There is a solution.
Don't waste your future. Call Thav Gross. We're experts at eliminating credit card debt. 888-235-HELP. That's 888-235-HELP.
Don't let legal problems destroy your family or your life. Get the justice you deserve. I'm Sabrina Cronin of the Cronin Law Firm, and I'm here to make things right. My firm handles family law, business law, and even criminal law. We can handle all of your legal needs. So whatever you're facing, I'm here to get you justice. You can't afford not to call. Call 855-CRONIN-LAW today.
Welcome back. All right, so we're talking about Fred. He's got a major payroll tax problem, and we got to step back a little bit. I got to make sure you understand some things. Payroll tax liabilities. On the federal payroll tax liabilities, ultimately, if you're operating your business as a corporation, which let's assume Fred was either a C Corp and S Corp. On a different show, we're going to explain to you the differences of S Corp versus C Corp. But either way, he's a corporation, and by being a corporation, the concept is you're not responsible for the entity's debts with certain exceptions. One of the exceptions is you are liable for the payroll trust fund portion of federal taxes. Now, what's the trust fund portion on the federal taxes? It's not the employer's share of the payroll taxes. It's the money that you withheld from the employee. His Social Security, his Medicare, and his federal withholding tax. You are supposed to take that and pay it into the government on that employee's behalf.
Ken, this may sound like a terrible concept that people are sitting there saying, oh my God, who would ever do this? But we run into this every day where employers are tight on money and they don't recognize early enough that it's time to shut down the business or reorganize the business, and they do this all the time.
It happens all the time. And let me just say, I don't think it happens because the people are bad people. If you're running a business and it's your livelihood and you're dependent on it, if you close the business down, you're out of a job, you're out of an income. How do you feed your family? How do you put your kids through school? How do you make your mortgage payment? How do you make your car payment? How do you turn on the utilities? What are you going to do? So you get into this grind where you've got the business and you don't have the money. You can't borrow from the bank. And all of a sudden you've made net payroll, but then the following Wednesday you got to make the depository. You're intending on making it, but sales are down and you don't have the money, so you skip it saying, I'll catch it up next week. And then next week comes and you don't have enough money to pay the current week's payroll taxes, let alone last week's payroll taxes. And now all of a sudden it's 52 weeks later and you owe the government $250,000 and you're not sleeping at all at night and you've got a big serious problem. It doesn't mean that you're a bad person. It just means you've gotten yourself into a big problem. You should have made moves earlier. You didn't, but now you got to deal with it.
But there are consequences, as is our word of the day.
Our word of the day.
To borrowing from your uncle.
Absolutely. So now the situation on federal taxes, you have the $100,000 that I said in terms of, or the $175,000 of the $250,000 that you owe to the feds is trust fund that's going to be assessed against you individually by the feds. Even though you're out of business, you can't get out of that $175,000, and you cannot discharge payroll taxes in what word, Brian?
Bankruptcy. They are non-dischargeable because trust fund taxes are never dischargeable.
Income taxes?
Absolutely dischargeable to a certain extent.
But they have to be how old?
The general rule, with about 85,000 exceptions, is the tax had to have come due more than 3 years ago, had to have been filed more than 2 years ago, and you can't have been assessed for the last 240 days.
All right, so income taxes, if they're old enough, can be and you meet Brian's 3 tests, can be dischargeable, but payroll taxes can't. So we're not going to get rid of this payroll tax problem with a bankruptcy. His other problem is he owes the state $100,000. The state of Michigan is the absolute toughest tax collector that a business person faces. If you don't pay the MBT, which thank God it's gone, and that we attribute to Governor Snyder. He's not your friend, but on that issue, he's the friend to all businessmen because everyone hated the SBT and then the MBT that replaced it. And that's gone, and it ain't going to ever come back, I hope. Anyway, enough of that. You don't pay your sales taxes. That can be assessed against officers directly. You don't pay the state withholding. That can be assessed individually. The state can assess all those taxes against the person in control of the business. So Fred is on the hook for the full $100,000 to the state. Now, extra facts. He also has income taxes for 2010, 11, and 12 for $75,000. Like I told you, he's closed down the business. Now, here's the important thing. He's about to land a new job. He's negotiated, and he's going to get himself in as the general manager on a new upcoming chain. He knows the investors. He has the inside track to it. He's going to have that position, but it's not going to start until June or July, so he's got some time. Meanwhile, he's currently making $2,500 a month, and he's working for his brother's business just to try and put food on the table. So his future with the new company is bright, but he's coming in to see Brian and me and Jenny and David to address his tax problem, and he wants to know, what am I supposed to do with this $250,000 or $275,000 of tax liability that I have? $250, it's actually $350, but he's on the hook for $275. That's the first thing we've explained to him. How does he deal with that problem? It's a big problem. He's going to have to make some moves in order to figure out what to do.
So winning the lotto isn't the solution here? There's actually a legal solution to get him out of debt?
There is. All right. Now, we've all heard, you watch on TV, the guy with the glasses, and he says, you can compromise your debt.
Pennies on the dollar.
Pennies on the dollar. There's a rule in the federal law called the offer in compromise.
I owed $150,000 in taxes, and I was able to get the government to take a check for $12.14.
And the offer in compromise rule is a good rule. Now, in the offer in compromise, if it applies, it's a good thing. How it works is this. If you have no assets, in that situation, you take 1 year's of income. You can settle your debt for 1 year of future income if you pay it in 5 months or less.
So Fred's got $2,500 a month of income right now. You're telling me that Fred can get rid of his $275,000 worth of debt for $30,000.
That's correct.
But that's not the $12.14 that I want.
No, it's $30,000.
But I can't get $12.14.
Well, if Fred was only making $1,000 a month, he could do it for $12. But I'm just being realistic. He's making $25,000. If he can put his hands on $30,000, he would be in a right situation to do an offer in compromise on the income taxes to the feds and on the trust fund portion of the taxes to the feds. And that would work. It doesn't take care of the state. So the key is, can Fred borrow $30,000 in time so that he has the money that he can do that? We're going to take a break, and we're going to figure out what Fred's options are between now and the end of the show.
Don't let legal problems destroy your family or your life. Get the justice you deserve. I'm Sabrina Cronin of the Cronin Law Firm, and I'm here to make things right. My firm handles family law, business law, and even criminal law. We can handle all of your legal needs. So whatever you're facing, I'm here to get you justice. You can't afford not to call. Call 855-CRONIN-LAW today.
Do you have tax problems, unfiled returns? Facing levies on wages in your property? You need an expert, not a cartoon character or salesman. Thav Gross is your solution.
You need to look at the big picture. That's what we do. We develop a plan that's right for you.
I had major tax problems. I didn't know what to do.
We did. We sat down together and solved your tax problem.
No more letters, no more phone calls. They saved me.
Call Thav Gross, 888-235-HELP.
Going from hourly to salary seemed like a good career move, but now you're working 60 hours a week instead of 40, and you aren't getting paid any of that extra time. You're stuck, right? Wrong. You can be on salary and still be entitled to overtime. If you've been wrongly denied such pay, you may be entitled to that and more. Gold Star Law is here to help you through your employment law problem, whatever it is.
Gold Star Law, protecting employees' rights. Call 1-800-WAGES-10 for a free consultation today.
If you're retired and in a financial crisis, there is a way out.
It pains me when I see a retired couple exhaust their savings by paying credit card bills and for a home hopelessly underwater.
Thav Gross specializes in helping retired people in financial crisis.
You just can't keep paying until you're broke. You need to address the problem now.
888-235-HELP. That's 888-235-HELP.
We're Thav Gross. Our firm will solve your problem.
No one ever thinks that a serious injury can happen to them, but it can and it does. and it can happen to you. And when it does, you need a fighter in that courtroom for you. Call me, Ben Johnson. Automobile accident, police misconduct, medical malpractice, product liability. You know what you're up against, how hard it is to get answers. When all you want is justice, call me, Ben Johnson. Whatever your legal crisis, I will fight for you. Call me today.
Welcome back. All right, so we're dealing with Fred's payroll tax problem. Here's where he's at. He's got $175,000 of trust fund liability to the feds, $75,000 he owes in income tax, so he owes $250,000. This offer and compromise will work to get rid of that because he has no other assets. Let's say Fred had $100,000 in his 401k. They would take the $100,000 and then settle the rest of his credit card debt, or I'm sorry, settle the rest of the tax liability. He'd still have to pay the $30,000. The offer and compromise only really works if you have no assets. If you have whatever you have in the way of assets, those are going to end up going to pay the tax, and you're still going to have to give them that 1 year's of income. But in this case with Fred, $30,000 can get rid of $250,000 of federal tax liability. He's still left with the $100,000 for the state. Now, what they never tell you on TV when you're listening to a national commercial is they never talk about the state of Michigan. I'll tell it to you straight. The state has no offer and compromise program. The state has no easy problem. They are difficult to deal with. What you have to do in the state level is you can negotiate an installment payment arrangement, and you have to try and do your best you can to make it as affordable as possible.
While making it as difficult as possible for the state to come after you.
And how do we do that? Now, there's where the key is. What Fred needs to try and avoid going forward is he does not want to have a lot of cash in the bank, and he also does not want to have wages that people can garnish.
I mean, the strategy here first is deal with the federal government as quickly as possible so that the only impediment to your future is the state, because then you can manipulate the system.
All right, so we have the state, and now we've dealt with the feds. What I suggest that Fred should do is this. He's going into business in July with people he knows. Instead of having him put him on as an employee paying him payroll, have him enter into an independent contractor arrangement where he forms an LLC or a corporation and he's paid through that entity. That way they can't garnish his wages. He can have his income going into his LLC or his corporation. It provides him a level of shield from the state that's going to be coming after Fred, who's been assessed the taxes, not Fred's wife, not Fred's company, but just Fred. So the LLC can help him. And then if we can't get a good payment arrangement that works, you could do what for the guy?
Well, when all else fails, if the state is being that belligerent, and what we could do is we could put Fred into a 5-year Chapter 13 bankruptcy, repaying the debt at 0% interest over 5 years. Is it the optimal solution? No. If you have to pay it back, I would rather stretch it out over the longer period of time. But the reality is that the state is vicious, and you've got to go on the offensive. You can't be reactive. You have to be proactive.
All right, now let's say Fred couldn't handle coming up with the $30,000 with the feds. If you owe the feds less than $50,000, you can get an automatic 72-month payment arrangement with the feds. I wouldn't do it yourself. I would still go to someone who knows what they're doing, because you never want to talk to the feds if you can avoid it, because they ask a lot of questions and you'd rather give them less information than more. If they call me, I don't have to know all the answers to the question, but if they call you, Brian, and you're the one who owes the taxes, and they say, where do you bank at? You can't say, I don't know where I bank at. You can't say where you're working at. You can't say, I don't know where I'm working at. But if they're talking to me and say, I don't know, I'll have to call and get back to you. So you always want to work with somebody who can shield you and protect you. But you can always get a payment arrangement right now. 72 months, they take an automatic debit out of your account. If you do that, there'll be no lien. So there are things to deal with. With the feds, are easy to deal with the problems. You have to know the right thing to do. I want to remind people we have a seminar coming up, and then we'll come back to Fred with some closing comments. We have a seminar coming up. It's on two times, March 6th, Wednesday, 6:30 to 8 p.m. at Bingham Office Park. That's by our office building at 12 and F and Telegraph. The following Wednesday, the 13th, at Bingham Office Park, same time, 6:30 to 8. Title of the seminar is Selecting the Right Moves. because this is what it's all about when it comes to financial crisis management. There are moves, but you have to know to make the right move, not the wrong move. You make the wrong move, you can ruin your next 10 or 20 years. You make the right move, you can make the next 10 or 20 years a fresh start and start preserving future income for you and your family. You want to sign up for the seminar? thavgross.com, fctalkcenter.com. Just go on the websites, click and sign up there, or call 888-235-HELP. You can sign up that way. You've got plenty of time. Seminars are the 6th and 13th. Those people that do show up to the seminars are also awarded a free copy of the book, Dump Your Debt, which happens to be a good guide to all of these options in terms of what you need to do. Now let's go back to Fred. Fred, if he doesn't take care of his problem, is going to end up working for his new company. And let's hope things go well and he's making $100,000 a year. And he's got stock options in his name. All of a sudden, the tax problem is going to come at him. And he's going to have given up a lot of leverage that he had.
Well,
They're going to levy his wages, and there's nothing he's going to do about it. And if those stock options become worth $1 million, the feds are going to collect every penny that they're owed, and the state's going to collect every penny they're owed.
Which is why, when you're facing financial dilemma and you've got tax problems, instead of hiding your head in the sand because things don't look like there's any hope, that is absolutely the time you need to be talking to a professional. You cannot wait till things get better, because when you do, it's like shooting yourself in the foot.
No question about it. And just so you know, is the corporation a benefit to Fred in this situation because he still ends up with $175,000 of trust fund liability? The answer is yes. If he wasn't a corporation, he would have had $250,000 of liability. He would have been liable for the employer's share of the taxes as well. He also would have that same liability if he was operating as a, very few people know this, so I'll let you in on a little secret. People in tax know this. If he was operating as a sole member LLC, he'd have complete liability for all of the employer's share of taxes as well.
That's because a single member LLC has what's called pass-through tax liability.
They're taxed as a sole proprietor. Same thing. So the corporation, whether he's a multi-member LLC or whether he's an S Corp or a C Corp, does have a benefit to him. You want to keep that in mind. So there's a lot of planning coming in and going out when it comes to taxes. Tough issues. I mean, the most important thing for Fred is he's got to be able to sleep at night. He's got to come up with a plan that he can adopt and move forward with his life so that when he gets that new job and they build it into a successful franchise, he's not broke in the end. Thanks for listening. We'll be back next week with the Financial Crisis Talk Center.